Have you guys ever heard of Carvana? It's the online car dealer that delivers cars to your home or sends them to one of their vending machines spread across the country. In 2021, the price of their stock soared, but less than a year later, it fell by 95%. What's good, you guys? This is Market Thrive, and today, we're going to talk about how Carvana's stock crashed and the reasons why investors are concerned about its future. Before we start the video, I would just like you to do me a favor by just hitting that subscribe button and the bell notification down below to keep you updated on this channel. So without further ado, let's hop into it. The business claims it wants to alter the way people buy cars. Investors also took note in 2021. Its revenue had more than doubled from the prior year. And since 2020, when it was at its lowest point, the stock value had soared by more than 1,000%. Carvana, in my opinion, is a prime example of a stock that, in the early stages of the pandemic, saw nothing but success, but now appears to be experiencing practically everything that could go wrong. In late 2021, the stock price of the corporation began to decline, 95% decline over several months. Additionally, the factors that formerly fueled Carvana's expansion were now warning investors of peril. What went wrong then? Carvana has never truly reported a yearly profit, preferring to concentrate on expansion. Carvana has invested a lot of money in marketing, such as with the prominent Super Bowl commercials and similar things. They always spend a lot of money, and they always have. Additionally, they don't earn much money. The business maintained steady growth and went public in 2017. However, the share price really shot off in 2020 when the pandemic was in full swing. Ernie Garcia, the CEO of Carvana, spoke with CNBC about the company's expansion in February 2021. He said, quote, "I think what COVID did is it shifted psychology faster in the direction of trying new things. And so I do think that the business probably has more demands today than it would have had absent COVID." End quote. Three key factors were driving the company's expansion as demand rose. One was the way it handled auto loans in its accounting. Like other auto dealers, Carvana provides loans to consumers in order for them to purchase cars. The company then sells the debt to investors, who purchase bonds that are guaranteed by the claim on client loan payments. Securitization is the process in question. Contrary to other companies, Carvana offloads its loans from its balance sheet in order to profit immediately rather than over time. The loans were more tempting to investors who had a larger risk tolerance and were more familiar with consumer credit at the time because interest rates were low. Gains on loan sales contributed 37% of Carvana's total gross profit in 2021. The growing price of second-hand cars was the second factor driving expansion. The cost of old cars increased due to a global chip shortage that limited the production of new vehicles. All market dealers benefited from this. The third was its low-contact internet business strategy, which permitted cross-state car trades. There are many people that are interested in the method that Carvana advertises. There are no salespeople on your team. You are aware of your price. You are aware of the incoming funding. The Carvana platform was ideal in today's age of social isolation. Unlike other virtually specialized enterprises, its stock moved in the same direction. They were really thriving throughout the pandemic, The stock's trajectory went steadily rising. The wind then altered its direction. After August's peak, share prices began to decline. Increases in COVID instances, problems with the supply chain, and rising inflation started to worry investors. It began with a broader fall in growth stock prices. They were comparable to other businesses like Peloton and Netflix that struggled to meet the high expectations created by the pandemic. To increase the number of physical facilities where vehicles may be inspected and repaired, the company declared in February that it would pay $2.2 billion to acquire the used car auction company ADESA US. However, the business reported its first ever quarterly revenue fall in April. Share prices decreased. With Carvana, they faced an increasing demand, and they hurried to provide it. And they expanded. They grew. And then all of a sudden, the tide seems to change. For whatever reason, demand is either non-existent or lower than anticipated. Since it appears that growth won't be the focus of the firm, investors are now taking a closer look at the specifics of the industry. The factors that had aided in Carvana's expansion and stock price increase were now acting as a headwind. Their securitizations were seeing a decline in demand. There were growing concerns that loan repayment for car owners would become more difficult due to rising inflation and a probable recession. consumer credit and growth equities are no longer as popular among investors. For many purchasers, used automobile prices were also rising too quickly. According to Carvana, the average cost of their vehicles climbed from January 2021 to January 2022 by more than 30%. Additionally, Carvana was addressing logistical issues brought on by the expansion and increase in demand. Concerns about the business were escalating. Customers of Carvana began to complain about difficulties receiving their vehicle titles, completing paperwork on time, and receiving temporary license plates from states they did not reside in. And throughout the second half of last year, such tales multiplied. In November, Carvana stated that the company was facing severe operational challenges brought on by record-breaking growth and COVID-related workforce shortages. Many of these problems, meanwhile, will persist through 2022. By May, the share price of Carvana was essentially at its lowest. After taking on a lot of debt to buy Odessa, the company declared that it would let go of about 12% of its workforce. Following complaints about titles and registration, Illinois attempted to stop Carvana in the state in July. Prior to now, the state has imposed stringent regulations on the business around the issuance of temporary license plates and registration. At the end of July, Carvana received a temporary restraining order allowing it to carry on with car sales in the state. Of the suspension, a Carvana spokesperson said, quote, "We provide title and registration services at a rate among the top-performing dealers in the state. Carvana shares of the state's commitment to reducing paperwork challenges as much as possible," end quote. So what is the next step for Carvana? Retail unit sales in August improved in Q2 earnings. The business claimed it was putting its attention toward cost-cutting and enhancing productivity. Additionally, it declared that starting in the third quarter, it plans to sell its loans to financial institutions rather than package them into securities. The morning after the announcement, the share price of the company rose by more than 40%. The way Carvana handles expansion going forward may determine the company's future course. A company may create so much demand for its products when it only focuses on an expansion that it may subsequently find it difficult to satisfy that demand. By the time they caught up, however, the macro climate and the demand for their product had changed for whatever reason, whether it was due to the price of old cars, problems with the supply chain, or other strange concerns. In relation to what appeared, they were overbuilt. A Carvana spokesperson said, quote, "The company remains firmly committed to continuous improvement and will stay hard at work making the best car buying and selling experience available even better," end quote. CEO Ernie Garcia said in a Q2 call to shareholders, quote, "You're reducing the speed at which we're growing today given the shift in focus. But our hope and belief are that by getting more efficient, it makes it easier to grow faster in the future because you have kind of less work to do per sale. And so, we'll hope to get that back over time at some point," end quote. The overall car sector has been impacted by shifting market dynamics. However, some rivals' stock prices, such as CarMark's, have not been negatively impacted to the same extent as Carvana. So what are your thoughts about their downfall? Feel free to jot down your thoughts in the comment section below. If you enjoyed today's video, please leave a like. And if you want to stay updated on our posts, hit that subscribe button as well. Once again, this is Market Thrive, signing off.